Hi students, how are you? I'm your tutor of SBR. My name is Abu Bakr. How are you? Are you fine?
Fine, thank you. Hello, sir.
I welcome you all in the first class of SBR. So, first of all, if you have to communicate anything, please use the chat box. We can communicate here. Please keep your microphones mute so everyone can hear clearly. So, first of all, let me share you the syllabus and the course of action, course of plan of SBR. So, if we talk about the syllabus of SBR, it is basically started from F3 level financial accounting. Then you have studied FR financial reporting, and now this is the final level of reporting, which is known as Strategic Business Reporting (SBR). So, financial accounting F3 and FR are the basis of this paper, which we are going to study, and a lot of things you will study, which you will feel that these things we have already covered at FR level. So the previous knowledge will be very important at this level. If our FR is good, if you are good in FR, obviously it is going to help you a lot at SBR level as well. Number one. Number two, this paper is not only important. This paper is not only important for at the SBR level, but this paper is also important for your AAA. Your AAA. If you're going to plan AAA in this session and next session, SBR is going to help you a lot because there will be a question which will be based on accounting standards. So if you are studying, if you are giving that AAA paper without studying SBR, you are going to face a lot of challenges. So this paper, which we are going to prepare for SB, which is the name of the paper is SBR, it is also going to help you in advanced audit and assurance as well. Just a minute. Let me clarify. Just give me a second. Okay. Is it clear now? If the sound is clear now. Okay. Okay, so I was telling you that this paper is also going to help you a lot in your AAA paper. There will be a question, at least question of 25 marks, which will be consist of accounting standard. So this is the importance of this paper, which we are going to study. In this paper, obviously, we are going to study accounting standards. The majority of the paper marks of SBR will be from accounting standards. Out of those accounting standards, some standards we will be repeating again because they are the standard which we have studied at FR level as well. And the topics which we are going to study here, it includes, if I go with the course plan, you can see the list of the topics which are going to study. We have provisions, contingent liability and contingent asset IAS 37. We have asset held for sale, and discontinued operation IFRS 5. We have borrowing cost. These are the topics of the SBR which we are going to study, and these are the same topics which we have studied at FR level as well. Then we have property, plant and equipment, IAS 16. We have investment property, government grant. We have intangible non-current asset, IAS 38. We have impairment, IAS 36. Again, these are the topics which we have studied at FR level, and we are going to study it again at SBR. So if you have a good grip on these topics, obviously you have to put little effort on these in these topic at SBR level. Otherwise, we have to put a significant effort again. Then we have the accounting policy IAS 8. We have events after reporting date IAS 10. Again, till these topics again, these are the topics of FR. These are the topic of FR level. Then we have IFRS 8. This is the topic of segment reporting. This is a topic of segment reporting. This is a new topic in segment reporting. Let me give you a little bit introduction. That in this topic, let's assume we have a multinational company who is operating in different geographical areas, who have different product lines, and being a shareholder of that company, obviously the shareholders are not only concerned about the overall financial statement. They are also concerned about that how the performance of a major product line of their business, how what is the performance of their major geographical areas. So there comes IFRS 8 about the segment reporting, where we report major product lines and a different geographical area as the segment of the company. Then we have related party transaction, IAS 24. In this standard, we will study about the related parties of the company, like parent, subsidiary, associate, board of directors, key management personnel of the company. So it is a practical scenario that companies may do transactions with their related party. For example, they give salaries to their directors, or they do transaction with the parent and subsidiaries company. So all these transactions are known as related party transaction. And for a listed company, it is very important that such transaction must be disclosed in the financial statement. For that purpose, we have IAS 24. We have fair value measurement, which is IFRS 13. In this standard, we will study about that how a fair value should be measured for a particular items in a financial statement. Then we have IFRS 15 revenue. This is not the new accounting standard for you people, because this is the standard which we have studied at FR level as well, and we are going to study it again at SBR level. So we have IFRS 15 revenue. Then we have employee benefit. Employee benefit, obviously a very new topic for you people. This is about the employee benefits. For example, companies give employee benefit like monthly salary, wages, medical allowances, post-employment benefit, which include pension, post-employment, medical facilities, termination benefits, long-term benefits. So all such benefits, how these benefits should be accounted for in a financial statement. For that purpose, we have IAS 19 employee benefits. We have share-based payments, and this is IFRS 2 share-based payment. Share-based payment, basically it is a form of the consideration. Normally the company pay the consideration in a form of cash, but sometimes companies pay consideration in the form of their equity instruments. Such payments are known as share-based payment, IFRS 2. Then we have lease, IFRS 16. We have studied lease little bit at FR level, but at SBR level, we are going to study completely the lease accounting standard IFRS 16, including lessee, lessor, sale and lease back, lease modification, lease reassessments. All these things will be studied here. Then we have financial instrument, IAS 32, IFRS 9. A little bit we have studied at FR level. We are going to study it at complete financial instrument. It is a quite complex and technical area, one of the technical areas of the SBR paper. Then we have tax, IAS 12. In this standard, we will learn about the accounting for taxation, including current tax, deferred tax. A little bit touch has been given at FR level, but in detail, we will study it here at SBR level. Then comes the group accounts, where we will study about the basic groups, IFRS 3, ventures, IFRS 11, accounting for associate, joint ventures, IAS 28, business combination in steps and disposals. We will be studying here. It is all about the group accounts. Then we have Forex IAS 21, where we will study about the foreign currency transactions accounting, where we will study about if we have an associate company or a subsidiary company which operate in some other currencies. So how to account it, how these situations should be accounted for. We will study here in IAS 21. Then we have consolidated cash flow statement. We have studied cash flow statement at FR level, but here we are going to study consolidated cash flow statement. These are a little bit different from those cash flow statement which we have studied at FR level, but the basics are same. But those were the simple. These are the consolidated cash flow statements which we are going to study here. Then we have other areas. These are including some current issues, small and medium enterprises, alternative performance measurement, such topics which are other than the accounting standards. We will be studying at last. Okay, so this is your syllabus, this is your course plan, and this is the tentative plan. The actual time might be different. It may take some extra classes. It totally depends upon the situation which we will face in the coming days. But I have planned that by the 17th of October we should be able to complete the course, but it could be extended. Okay, it is not finalized. This is a plan, this is a budgeted time. You get it? Any question about course plan, about your syllabus? Can you hear me? Any question? Any query? Okay, welcome you all again. Very sorry for inconvenience due to some technical issues. The app stopped working, so we will resume the class where it was disconnected. So we were discussing the course plan. Can you hear me? Please confirm. Can you hear me? Thank you very much. Okay, so this is your course plan, which we will complete, and I was discussing that it is the tentative time. We will try to complete it by the 17th of October, but it may take some extra classes. So keep in mind that it is a planned course plan. The actual time might be different. Okay. Now any question on your about the course plan? Any question? Yes, yes, Prishma, yes. What's your question? Okay, okay. And what was your previous qualification? Okay, no problem. Kitika, no problem. If you're late, no problem. Welcome. I welcome you in the class. Okay, you have a degree in accounting. So in that paper, in your degree, have you studied accounting standards? If I ask very specifically, you have you studied property, plant, and equipment, borrowing costs, government grant, provisions, contingent liabilities, contingent asset? These topics have you studied? Okay, but all these topics which I'm naming here, you come across those topics in your study. Okay, then there is no problem, because all those topics we will study here again. Okay, we are going to revise all those topics. So if there is any disconnectivity in your previous qualification regarding the depth, that would be covered here. That would not be a problem. Okay, so it was your course plan. Now I will move towards the your exam pattern. I'm just trying to access the ACCA Global so I can show you a proper exam environment on screen, because you know that this paper will also is going to be a computer based exam. So you people should have the idea that how exam is going to be appear on your exam lab. So we have SBR, Strategic Business Reporting, and we are going to access practice platform. So log into practice platform. Just a minute. Okay. So we have SBR and okay. In your exam, you people will be having two parts in your exam paper. Each part will be consist of 50 marks. First part will be the part A, section A, which you people can see here, part A, and this section A will be consist of two questions. And the total marks will be 50. But in these two questions, question 1 will be of 30 marks and question 2 will be of 20 marks. Keep in your mind. The first question, which will be consist of 30 marks, it will be all or the majority of these marks will be from group accounts, consolidated financial statements. It will be from group accounts. The second question, it will be from accounting issues. When I say the accounting issue, that means there will be some case studies on accounting standards plus the ethical issues. The question number 2. And let me tell you, in SBR, you will see that in SBR, in every question, when we will be answering, when we will be practicing, you will see that in every question, in every question, you will see the requirement that discuss the case below, explain. Okay, there will be very little requirement where they will require us to calculate. So keep your mind clear that at SBR level there will be not a lot of calculation. There will be no calculation. Okay, if I divide it, if we have total 100 marks in our paper, let me tell you, maximum, I'm telling you maximum, if there are maximum marks which are based on numeric, if your luck is very good, the maximum marks which would be based on calculation are not going to more than 20. Okay, so in every question there will be an accounting issue which we have to discuss as per the accounting standard. For example, let me give you an example. Just for your understanding. Investment property, IAS 40. The properties which are held for rental purposes or held for capital appreciation. For example, there will be a case study. A business has a portfolio of a property. In that portfolio of property, some properties are being rented out, some are being used by the company, some are being held for sale, and there will be some mention in a question that the company is using IAS 16 property, plant and equipment all for those properties. And let's say there will be a requirement, discuss the accounting treatment of the management of these properties. So if you know that the investment, if the property has been rented out, is held for rental purposes, that cannot be classified as an property, plant and equipment under IAS 16. Similarly, if we have some properties which are held for trading, the right place for such property is inventory is IAS 2, not IAS 16 or IAS 40. Okay, so such type of case studies, I'm just giving an example, such type of case studies will be given in exam where you have to discuss or where you have to explain the accounting treatments did by the management. So you have to be very good in accounting standard. Clear your mind that you have to be very good in your accounting standard. You should have a very good grip on IAS 16, IAS 23, IAS 20, IFRS 9, IAS 32, IAS 12, IAS 19. If you have a good grip of knowledge on accounting standard, then there is no one is going to stop you from passing the SBR. Okay, so this thing please keep in your mind that the knowledge of accounting standard is very important. Okay, as per our syllabus, because In SBR, the knowledge is going to get you past the exam, not the numerics. So the first part will be consist of 2 questions, as I told you, and the total 50 marks will be available from here. So this is the screen. This is the question number 1. Basically, you are looking at a question number 1. Okay. Now on your left side, you can see exhibits. These are the exhibits. These are the general guidelines. About the question. Okay. Now, what are exhibits? Dear student, exhibits are basically parts of the question. Exhibits are the parts of the question. Exhibit number 1, basically a part of the question 1. First part of the question. Exhibit number 2 is the second part of the question. Exhibit number 3 is the third part of your question. These are just part of your question. And every exhibit has a unique requirement. When you click the requirement box, a window will be open, which consists of requirements of exhibits. Okay, you can adjust this window as per your convenience. Okay, so we will come back to the requirement. Now I'm a student. I'm sitting an exam. What I'm going to do, first of all, I'm going to open the exhibit number 1, and as I told you, we can adjust this as per our convenience. I will read the exhibit number 1. So on 1st April X2, C company acquired 30% of the equity share in G company. The consideration consisted of 100 million cash. The carrying amount of the net asset of the G company on 1st April X2 were 286 million, which was same as a fair value. Since then, G company has been correctly treated as an associate in a consolidated financial statement of the C company. The remaining 70% of the G company at 1st April X2 is owned by few other investors, none of which own more than 10% of the equity of the G company. Analysis shows that all the shareholders have voted independently in the past. C company and the G company share some key management personnel. Okay, now this is the question. This is the information. I'm not going to discuss that, what is the answer and how it should be discussed. I'm just telling you, as being a student, I will study, I will read this exhibit. When I will read the exhibit number 1, I will open the requirement box. And here the first requirement. This first requirement is basically related to exhibit number 1. Okay, now why it was correct to initially classify G company as an associate company as opposed to subsidiary company on 1st April X2. This is our first requirement, that we should classify this company as an associate. Okay, again, I'm not entering into argument why or why not. I'm just telling you the exam technicalities. So when you have done it or when you have read it, you will move, because in exam you have total 3 hours and 15 minutes, and out of those 15 minutes is for reading time. So I will suggest, before starting the exam, first of all you should read the questions. Okay, give a quick review a question and first select the question which is an easy one, and then start your paper. So you have 3 hours and 50 minutes for reading, but it is up to you that you want to utilize those 50 minutes for reading, or you want to utilize total 3 hours and 50 minutes in answer the question. But being a teacher and as an experience, because I also have a journey which you are facing at the moment, being a student, I would suggest that 15 minutes should be utilized for reading the question. Because if you read the question, it will create the sense and it will help you answer the question. If you haphazardly start solving the question without reading, without looking at what is the question number 2 and what is the question number 3, and you just jump on a question number 1 and you just started to solve the question, you might get another way. Okay, so that would not be a good thing. I think so. So you people should first of all give 15 minutes to cover, study, to read the entire question paper. So when you have read the exhibit number 1, then obviously you will the exhibit number 2. As you we will click, the second exhibit will be open, and there will be the information that C company acquired further 18% in G, and so on. So again, there will be a requirement in that. So how G company should be accounted for an associate in equity method in a consolidated financial statement on 31st March X2. Your answer should explain how the revaluation of the land was accounted for in Exhibit 2 and include all the relevant calculations. Okay. Then requirement number 3, whether the classification of the C company investment G company should be changed on 1st April X2 or no. You will when you will read it, you will get the requirement, you will get the understanding. Then similarly exhibit number 3, and then you have a then the requirement additional information. So when you have read the question, when you have read the requirements, then you have the response option. Then you have a response option. Here we have response option are basically answer sheets. Now in this question we have 2 response options. One is word processor and one is spreadsheet. So we will use the word processor and we will also use the spreadsheet, but it is up to the student to decide that when he will going to use spreadsheet and when he is going to use the word processor. But let me guide you one thing. Now for example, if I come to the requirement, now the first part of this requirement, if you read this requirement, you will see, you will feel that he's just asking that why it should be accounted for as an associate. Okay, here he just want a discussion, just an explanation. So for this requirement, I am not going to use the spreadsheet, I am going to use the word processor. Okay, I will use the word processor. I will come here, I will write the requirement number 1, requirement part A, first part. Okay, and I will answer the requirement. Then in a second requirement, it is a combo. In this requirement, we have to explain and we have to calculate. So we have 2 things here, explain and calculation. Now for such requirements, we basically recommend that the calculation part should be done on spreadsheet, obviously giving the heading that the question number 1, basically question, there is no need to mention a question because it is by default it is a spreadsheet, it is a window of question number 1. So we will write the requirement A part 2, requirement A part 2, requirement A part 2, and you will do the relevant calculation. Then when you have completed the calculation, you come to the again the word processor, again give the heading of the requirement, and you will start to explain, start to discuss, and in those discussion you will refer the calculation which you have done in a spreadsheet. Okay, so I'm trying to say that it is on, it totally depends on the requirement of the question. Is such some requirements are just on some require explanation, there you will use only the word processor. Some may require some explanation with some calculation. For those part, you have to use the spreadsheet and the word processor both. So it is totally depends on the requirement of the question. You get it? Then the second question, as I told you, part 2, question number part A, question number 2. Now this question is consist of 20 marks, and here we have only word processor. Now it is totally up to the examiner that which respond option you will have in your question. Okay, so it is not mandatory that the question number 2 will have only one response option. Now in this question he give us only one response option. It is totally up to the examiner. So why we have only one response option? Because in all these requirements you can see that there is only one nature of requirement, that is discussion. There is no calculation involved in this question. So here we have only word process. Again, the exhibit, some ethical background, some accounting issue, then exhibit number 2, exhibit number 3. You will study the exhibits. You can adjust, as I told you, the screen as per your requirement. Then we have requirement option. Then after the requirement, we have word processor. So when you have completed the question number 2, or if you want to jump directly on another question, you can use a navigator as well. You have a navigator as well. So the question 1, question 2, then the part B will be started. Now in the part B, again we have 2 questions, but here each question will be consist of 25 marks. Again 50 marks. The same style. Exhibit, company cars, emphasis, requirements, word processor and spreadsheet. Here we have 2 response options. Okay. Then again development cost, IAS 38, ICU arrangements, token granted to directors. I think it is a related party transaction based on IAS 24. Then we have requirement, and again we have only one response option here again, which is word processor. You get it? You have calculator here. You can use the calculator, okay, on your screen. So scratch pad, highlights, but these are not used by the students. Student just if you're sitting in exam, your focus is just only on the question and the requirements. Okay. But if you want to use the I think if you're sitting in this environment in your exam, there will be little need of a calculator, because if you have to you have to do some calculation, you people have already done on the Excel sheet, on spreadsheet, okay, through the formulas. So but there will be a little need of a calculator in a computer based environment. But if you want to use the calculator, you will have a calculator on your screens. Okay, you get it? So it was your exam pattern. It was the exam screen which you people are going to face in your exam at SBR level. And once you have completed the course, when we have do all the practice of SBR, before going to exam, I would suggest that you people should attempt at least one past paper on ACC practice platform in your home, in your offices. So when you go in exam, you should be familiar, you should be well practiced. So it will help you a lot. It will help you a lot. Okay, and it will give you a good chance to pass SBR with the good marks. Not only our objective is to pass the exam, but our objective is to get good marks, because if you put a little effort, it is easy to pass SBR. Let me tell you, its global pass rate is more than 50%. Its global pass rate is more than 50%. If you put some little bit extra effort, if you study the accounting standard and you get the good grip of the accounting standard, there is no issue in passing the SBR exam. But our objective is not to only pass the exam. Our objective is to get the good marks from the SBR exam. Okay, you get it? Any question about the exam pattern which we have studied, students? Any question? Okay. So now let's start the first topic. And as per the list, the first topic which we are going to study is IAS 37, which is about provisions. Yes, one more thing. about the study practice material and the study material. The notes will be shared with you of SBR, and a practice kit based on the past papers will be shared with you. But if you want to use study text written by the ACCA approved publishers, I would recommend that you people should use Kaplan. You people should use Kaplan for SBR. But in a class, we will share the notes. Okay. But for personal satisfaction, for study more, if you want to use any book, I would recommend that you people should use the Kaplan study text for SBR for your personal needs. So the standard is provisions, contingent, liabilities, and contingent assets. Provisions, contingent liabilities, and contingent assets. And the accounting standard is IAS 37. So making the class interactive, anyone who want to share his knowledge about provision, what are provision? What is provision? Anyone? Because it is not new for you. Provision. What is provision? Anyone without any hesitation. What is provision? I'm waiting for your response. You have to answer. Yes, students. Where we anticipate any loss. Okay, very close. Okay, anyone more precisely? Cost that we expect to incur, not, I would not go with this. Okay, anyone who can tell me very precisely, because this is not a new standard for you people. We have studied this standard at F7 at FR level. What you have studied about provision? Okay, let me remind you. Yes, provision is a liability. That's the right thing. That is the right one. That is the right one. So provision is a liability. But there is some difference. But there is a bit difference between provision and liability, but it is a liability. So what is the definition? As the student, the same told us that provision is a liability. Provision is a liability, but provision is a liability, but of uncertain time or uncertain amount. Uncertain time or uncertain amount. The provision is a liability of uncertain time or uncertain amount. Now, let me explain you a little bit. Now, for example, just assume that you are a CEO of a catering company. This catering company deliver a food to its customer, but due to the food, some customer died or get health problems. So the customer went to the court and filed a case against the company. Now the company went to the lawyer, its company lawyer, and the lawyer told the company that there is a strong evidence that the company will find guilty and you have to pay the penalty, and the penalty of, for example, 100 million US dollar. You have to pay 100 million US dollar as a penalty for showing such carelessness. And due to the food delivery, the customer guest are died and get health problems. So you will find guilty. They have a strong evidence. They have a strong case. The court will decide the case against you. And as per my experience, you will be fined with the 100 million US dollar plus minus 10%. Now, in this scenario, basically the lawyer is telling, a professional is telling you that a liability has been created. Now, you are liable. The company is liable. It is just the matter of time when the court will decide. So some uncertainty about time. And the amount will be $100 million plus minus 10%. So there is little bit uncertainty about the time or the amount which will be required, but there is no uncertainty about the present obligation over the company. Now, in such scenario, this $100 million will be known as a provision, a liability of uncertain time or uncertain amount. You get this? Now, to get more clear, we need to define the liability as well. Liability. Now, what is a liability? If we get the understanding about the liability, then it would be easy. It would be very easy for us to understand the provision. Liability number one is a present obligation due to a past event and will result in outflow of economic benefits. This is the definition of a liability. So when I say, or when you said that the liability provision is a liability, that means it is understood that the definition of the liability must be fulfilled. If something is not a liability, then we cannot say that it is a provision. And for a liability, it should be a present obligation. Number one, present obligation means that there is no alternative. You people do not have any alternative to avoid this. If we have the alternative, then it is not the present obligation. Obligation means there is no alternative. You have to fulfill your obligation. Obligation has created on you, created on a company, present obligation. And this present obligation may be a legal obligation, or it might be a constructive obligation. Legal obligation means the obligation which is created by the action of law, maybe on the order of the court, maybe by the legislation. That obligation has been created. That would be known as legal obligation. Constructive obligation means the obligation which is not created by the law, but the entity own stated policies which has been communicated to the other parties, so it has created as an expectation in the other party that the company will fulfill its promise. Now that obligation is known as constructive obligation. For example, a company has a very clear policy that we are very environmental friendly company, and whenever they go to a specific area for a business, first of all they take care of the environment, the surroundings of their business area. So if the company is going to X place to make a factory, to construct a factory, so the resident of that area will expect that the company will keep the environment good here. They are the environment friendly company, so it has created the expectation. They are not obliged by the law, but they are obliged by their own stated policies. Now such obligations are known as constructive obligation. And in IAS 37, the obligation, whether it is a legal, whether it is a constructive obligation, mean obligation. Okay, and that obligation will be due to a past event. It is very important. Past event means an obligatory event. So if there is an obligation on me, that means in the past I have did something. Without doing anything, how an obligation can be created on me? How a judge can punish a person who didn't committed a crime in the past? Can a judge, can a court commit a person that, okay, you are going to kill someone in the next 6 months, so I'm sending you in a jail, okay, or I am giving you a capital punishment? It is not possible, because if the something is going to happen in the future, how we can punish someone on the basis, okay, you are going to something in the future, so I'm going to punish you today? We have to wait. The first he should or he will, when he would commit a crime, then the action will be taken against him. So for every obligation there will be a past event. So if we have an obligation on us, that means there is something happened in the past. Like in a catering company, they have delivered a bad quality food. That was the past event. That was the obligatory event which created the present obligation today. So there will be present obligation, and present obligation means that there will be a past event. If there is no past event, there cannot be any present obligation on today. Okay, so present obligation due to a past event, and it will result in outflow of economic benefits. So you have to give something. to fulfill or to complete your obligation. So this is the definition of the liability. And if we are saying that something is a provision, then it must be a liability as well. Then it must be a liability as well. Okay, you get it? Any question? Other students? Everyone is clear on this? So the examples. Let me give you some practical examples of the provision. First example is about warranty. Number two, refunds policies. So before I move on, what is warranty? Can anyone explain? When we say a warranty, what is the meaning of a warranty? Yes, anything which comes in your mind when I say a warranty, warranty of a product, warranty given by Samsung, warranty given by Apple. Okay, I'm not asking about the alternative terminologies. I'm just want to know that what do you think about the warranty when we buy a product? If they okay, yes, warranty means the company is giving you a guarantee. Company is the manufacturer is the provider is making a promise with you on the time of sale that if there is any manufacturing defect, if there is any manufacturing defect in the given product within a given time period, the company will rectify that without any cost. That is the warranty. For example, especially when we buy some products, especially the electronics product, when you buy a laptop, when you buy a smart TV, when you buy a mobile phone, normally those come with the warranty card, with the 12 months warranty. In some product we have 2 years, 3 years warranty as well. Okay, so in that case, when a company, for example, if I take an example of Samsung, a brand, if you take an example, when they sell their product, they give a warranty of 12 months. And when they give selling the product, they are making a promise. So the selling is a past event and making a promise is creating a present obligation. So they will make a provision that there is a chance that there might be a defect in those products which we are selling. For example, their past history will show them, okay, when the product when we sell, there is 5% product which came back for the warranty claims. So they know that the product which they have sold, in those products, there are 5% product will be, at least there will be 5% product will be a defective product. So they know that they have sold some defective product to the customer. Out of 105 products which they have sold are defective, they know, they have estimated that thing. So when they have sold it, that means the sale of that defective product is a past event. and they have made a promise that they will rectify it. It will create the present obligation that when the product will came back within the 12 months, they will rectify that. And obviously on that repair, on that exchange, there will be a cost, there will be an outflow of economic benefit. So the warranty is fulfilling the definition of a liability. Okay. Similarly, the refund policies. In a refund policies, when we sell something to a customer, we give him a time period of, for example, of 3 months, usually, or 1 month or 2 months, that if you are not satisfied with the product, if my claims are not true, and you find it, I'm saying about the product something I'm claiming which is not in the product, you can come back with that product in the next 3 months and I will give you a refund, for example, 100% refund. So my business practice is telling me that when whatever I sold, 5%, 6%, 7% customer will come back. They will not be satisfied and they will demand the refund. So when I sold something, I know that I have made a commitment that I will make you refund. So there is a sale, there is a promise, there is a past event due to which on me a present obligation, and 5 to 6% will come back. So I have to give them the economic benefit. I have to refund, I have to return the money back. So there will be an outflow of economic benefit. So the refund policies are also an example of a provision. Another example, if I give you, for example, joint liability when other party is not going to fulfill his or her promise. Now, for example, two companies take a loan of $100 million jointly, company A and company B. Each company has $50 million in their pocket and they are jointly liable for this $100 million. Now, for example, about company A, in the books of company A, the company A has booked his part of liability, which is $50 million. The company B was financially good company, there was no problem, so there were no worries on the part of company A. But after some time period, the company B get into financial problems, and now for a company B, it is not difficult to repay the bank loan. So what bank is going to do? Bank is going to go for Mr. A, company A, that you people were jointly liable. If the B is not making his payment, you have to pay it. So now the company has already signed a contract in which he is jointly liable, and now the company B is in a financial problem. So there was a past event, the signature on a contract. Now the company B is now in a financial problem. That means it is not the present obligation of a company A to fulfill the entire loan, to pay the entire loan if the B is not giving or is not unable to pay it. So there will be an outflow of economic benefit. So in such scenarios, we also book a provision of company B related to company B, because company B, if we feel he is not going to pay, then we have to pay. Another, if you give an example of a provision, it is about dismantling cost or environment environment cleanup cost. Now, dismantling cost. What is dismantling cost? Do you have any idea? What is dismantling cost? Dismantling cost means when, for example, if we build a factory in some area and by law or by our own practices, we have to dismantle the factory at the end of useful life. So for that purpose, I have to make a provision now because there is a present obligation on me. Because when I have installed the factory, when I have constructed the factory, that was a past event, and my commitment or by law, there is an obligation on me that I should dismantle this factory when I fulfill my operations here. Okay, so that is known as dismantling cost. Similarly, environment cleanup cost means if I am doing a business in a specific area and I am creating the environment problems, so by law or by my company policy, there will be an obligation on me that when I complete my task, I will rectify the environment, I will clean up the environment, I will rectify the damage which my company has caused to that environment. So again, it will create a present obligation on such. So we will make a provision for such things as well. Another example of a provision that is onerous contracts. Onerous contracts. What are onerous contracts? Anyone? Onerous contracts. Loss making. Contracts which are expected to make a loss. Such contracts are known as onerous contracts. For example, we have a sign to construct a building and we have agreed that we will take total 100 million US dollar. But after that commitment, the cost has increased and now to fulfill the contract, I have to incur total $110. So now I am expecting a $10 loss on this contract. Now, such contracts are known as onerous contracts. Such contracts are known as onerous contracts. Now, we have signed a contract, so there is a past event. We have the commitment to fulfill that contract, present obligation, and we have an probable loss of $10, net loss of $10. So it fulfills the definition of the liability. So we will make a provision for the onerous contracts. So the example which I have given you, in all example you can see whenever in all example there is a present obligation, there is a past event. So whenever there is a present obligation, there is a past event, outflow of economic benefit is probable, that is a liability. And if the timing or the amount of that liability is uncertain, a provision will be recognized. A provision will be recognized. You get it? Any question? Any question? Okay. Now, the recognition of provision. When a provision should be recognized in a financial statement. Now, in a recognition of provision, we have a criteria, and I will describe that criteria in 3 lines. We have already discussed that. Well, let it rephrase. A provision will be recognized if and only if all these 3 conditions are satisfied. Number 1, there is a present obligation due to past event. Number 1, so this condition must be fulfilled. There must be present obligation, there must be a past event. Number 2, outflow of economic benefit is probable. And number 3, reliable estimate can be made. If all these 3 things are fulfilled, there is a present obligation due to past event, outflow of economic benefit is probable, and reliable estimate can be made of that benefit which is involved in fulfilling the obligation, then a provision can be recognized. And by recognition mean a double entry can be made in which expense will be debited sometime. Property, plant and equipment is also debited, and a provision will be credited in a financial statements. This entry will be made if the recognition criteria is fulfilled. If anything is missing from the recognition criteria, we cannot recognize a provision. Okay, usually provision is treated as an expense, but if the provision has been created due to an asset and that is directly attributable to the asset, then the property, plant and equipment can also be capitalized. The examples are dismantling cost. The provision for dismantling is directly attributable to the property, plant and equipment, and they are usually capitalized initially as a part of the cost of the asset. Any question on this recognition criteria? Now I am giving you now the examples where a provision will not be recognized. And the reason that the provision will not be recognized because there is no past event. And if there is no past event, a provision cannot be recognized. Number 1, staff training cost, purchase of asset in future, repair expenses, future repair expenses, advertisement cost, trading losses, overhauling, or major inspection. These are the examples or similar items like these. For such transactions, provision cannot be recognized. We will not recognize the provision as per IAS 37 because in all these things there is no past event. These are all future events which will take place in future. For example, we will send the employees on a training in 2 months, in 3 months. There is no past event. With a company will buy an asset in the next month, in the next year, there is no past event. Okay, I'm going to get my machine repair, manufacturing plant repair. I'm going to repaint my factory. These are all the events which are going to take place in the past. Advertisement cost, future trading losses, overhauling, major inspection. For all such things, a provision cannot be recognized, and the reason is they lack the past event. Okay, and all these things are known as future operating cost, and 37 strictly prohibit to recognize any provision for future operating loss. Okay, and one more thing which are usually tested in exam. Those are expected disposal expenses, for provision cannot be recognized for expected disposal expenses as well. Okay, and there is a special case of a provision in IAS 37. Which is known as restructuring or reorganization. Now, what is restructuring? Restructuring is a plan by the management in which scope of business or the way of or manners of doing business are going to change. So if the company is planning something in which they will change the scope of the business, or they will change the way of doing business, we will say that the company is going to do restructuring. Examples are disposal of a subsidiary company, closure of operations, eliminating the management, disposal of subsidiary, closure of the operation, eliminating the management, or introducing technology in business. For example, now we will not use the manual labor. Now we will use the robotic technology. That is a change in technology. Now, despite conducting physical classes, now we will conduct the classes online. That is a change of technology in a doing business. Now, in all these examples, either the scope of the business is changing or the way of doing business is going to change. And these are the example of restructuring. And whenever these things will take place, we have to terminate the employees. The employees will be terminated. There will be some unavoidable legal costs, because when we are going to close a business, when we are going to sell that subsidiary, obviously unavoidable legal costs will be involved. So these things are known as restructuring. Now, by law, when we will terminate the employees, we have to give them some benefits, which are known as redundancy cost. So we have to recognize a restructuring provision. We have to recognize a restructuring provision when any of these things will take place for unavoidable expenditures like redundancy cost. Okay, but to recognize the provision for restructuring, there are two conditions which need to be fulfilled. Number one, there must be a formal plan. A plan has been finalized. Plan means we have identified the area of the business which is going to affect, the employees are going to affect, what will be the estimated cost of carrying out such restructuring. All those things are finalized and they have been approved by the BOD, Board of Directors, or relevant authorities. And number two, that plan has been communicated or started to implement before the year end, before the financial year end. If all these two conditions are satisfied, then a provision for restructuring can be recognized. Otherwise, we cannot recognize a provision of restructuring, of a restructuring. You get it? Any question? Any questions, students? Now, the last thing about the provision, that is measurement. How a provision should be measured. Yes, Prishma, yes. They must disclose the reason of provision. If they do not disclose it, then how the shareholder is going to get that why the specific provision has been recognized. So it is a right of the shareholder that they should be given a proper information. Okay, and if you take it principally, the objective of financial statement is to convey true and fair view of the financial statement, which may help the user of the financial statement or the other stakeholders to make their economic decisions. So if we just give a figure and we just show it in a statement of financial statement, and we do not disclose that what is the reasons of the provision, why we have made a provision, then obviously the information has not been conveyed properly. Okay. So provision will be recognized, and obviously the nature, the reason should also be disclosed. Now the measurement. Now if we talk about the measurement, 37 says that whenever you recognize a provision, it should be best estimate. It should be a best estimate. Best estimate means that in measuring the provision, we have considered all factors, whatever the factors are, concerning factors are, all the factors has been incorporated in measuring the provision. And if the time value of money is material, provisions are or must be discounted to their present value using a pre-tax rate of return. Obviously, to discount a provision, we need a discount rate, the company rate of return. That rate of return should be a pre-tax rate of return, and obviously that rate of return should also consider all the concerning factors. Okay. And when we will be measuring the provision in which we are making the best estimate, we have two scenarios. Number one, we will be facing, might be facing a scenario in which there is only single outcome. Single outcome means like a court case is an example of single outcome. Or the other one is a scenario where multiple outcomes are possible, or you can say multiple outcomes or a large population is involved. For example, like a warranty cost or refunds. Now, if the single outcome, like a court case, is only involved, then the provision will be made at a most likely outcome. On the basis of most likely outcome, provision will be made. If a large population is involved, like a warranty cost, then it will be made at expected values. It will be made at expected value if the large population is involved. If a single outcome is involved, then most likely outcome. But all the factors will be considered, whether it is a single outcome, multiple outcomes, and a discounted will be done at a pre-tax rate of return if the time value for money is material. Now let me give you the examples. Okay, when you people get the notes, it will be a chapter number 10. It is a chapter number 10 which we're studying, IAS 37. Okay. Read this example. Read this example. In each of the following situation, consider whether a provision should be recognized, assuming that the reporting period ends on 31st December. An entity in the oil industry clean up contamination caused by its operation when required to do so under the law of a particular country in which it operates, only when it is required by law. One country in which it operates has no legislation requiring cleaning up. The entity has been contaminating the land for several years. At 31st December 2004, it is virtually certain that a draft law requiring a cleaning up of a land already contaminated will be enacted shortly after the year end. So if you know that you have already committed something in the past and now there is going to be a law which is virtually certain is going to enacted, in which you people will be required to fulfill for your activities which you have done in your past, what do you think that whether a provision for such cleaning up should be recognized by this company or not? What's your opinion or your conclusion? What do you say? Should this company recognize a provision? Okay, is it going to be their present obligation? Due to past event? Okay, may not. Okay, yes, yes. Yes, a provision should be recognized. Now, past event has been done at the year end. They have already contaminated the land, and they know that a law is going to be enacted which will require from them that they should rectify the land, they should clean up the land, okay, which has been done already before the year end. So past event has been done, condition exists at the year end, so a provision should be recognized. A provision should be recognized. Principally, it should be recognized. Now this paragraph. The government has introduced a number of changes to the regulation of the financial service industry. As a result of these changes, entities will need to retrain a large proportion of their employees in order to ensure the compliance with the financial service regulation. However, the retraining is not statutory requirement. One entity affected by the new regulation had not done any retraining before the end of reporting period. So what do you think? Whether the provision for this retraining or training cost should be recognized? My answer is no, because 37 very specifically says a provision for training cost cannot be recognized because there is no past event and there is alternative. So if the company think that it is not feasible for them to do business in a current legislation, they can change their nature of business. So there are the alternatives, and there is no past event, these are the future events, so a provision will not be recognized for the training cost. On 8 December, the board of entity decided to close down a division, scope of a business, restructuring. However, this decision was not communicated to any of the affected, and no further steps were taken to implement the decision before the end of the reporting period. So on 18 December, they have decided, formal plan is there, but the plan has not been communicated. The plan has not been communicated to the effective parties till the year end. Now, the 18th December 2006, the board of the entity decided to close down division, and on 28 December, okay, now focus on this paragraph. Whether this provision should be recognized in this scenario, where the plan has been made, but it has not been communicated or not started to implement before the end. Yes, no, because the second condition has not been fulfilled. Now, this scenario, read this scenario. On 18 December X6, the board of an entity decided to close down a division. On 23rd December, a detailed plan for closing down the division was prepared by the board, and announcements were made to employees concerning redundancies, and in addition, the letter was sent to the customer advising them of proposal and recommending alternative suppliers. What do you think about this? The plan has been there, is there, that has been communicated. Yes, in this scenario, a provision will be recognized. In this scenario, provision will be recognized, should be recognized. Yes, for redundancy cost, it should be recognized. Now, read this example. So it is a single outcome. There is a 60% chance that the employee will win the case and you have to pay the compensation. So it is more than 50%. So there is a present obligation, there is a past event, and outflow of economic benefit is probable, and the lawyers are advising you that you will be found guilty. And it is a single outcome. So a provision on the basis of most likely outcome, and in this case there is only one outcome, that is 60,000. So a provision for 60,000 should be recognized at the year end. So an entity sells high definition television with a 12 months warranty under which customers are covered for the cost of repair or replacement of manufacturing defect and found during the period after the purchase. If every product sold required minor repairs, annual cost of 0.5 million. If every product was replaced, the annual cost will be 3 million. Based on trading history, it is believed that the 80% of all the goods sold will have no defect, 50% will have 5% will have minor defect are 15%, and who the product which will need to be replaced are 5%. So for 80% there is no need to recognize any provision. This is the multiple outcome, large population, so expected value will be used. 15% will have a minor defect and 5% will need to be replaced. So 225 will be the expected value of the provision which should be recognized. And as we discussed, provision should be discounted if the time value for money is material, and a pre-tax rate of return will be used to discount the provision. Reimbursement means that sometime the expenses, for example, the warranty expenses has been insured by the insurance company or by the manufacturer. So if you incur any warranty expense or any provision expense, you will get reimbursed. So if there is any reimbursement on a provision, that reimbursement can only be recognized if it is virtually certain that the expense will be reimbursed. If it is virtually certain, more than 95% basically. If there is more than 95% chance that the provision will be reimbursed, then a reimbursement asset will be recognized. But this reimbursement asset will be recorded as a separate asset in a statement of financial position. We will not net the reimbursement asset with the related provision. Provision will be disclosed separately in a balance sheet, in a liability side, and the reimbursement will be recorded as a separate asset in a statement of financial position. Okay. The specific accounting provision we have discussed. When you people get the notes, you people should read this topic from chapter number 10. Okay, and the contact with the management. I think if you have fulfilled the form, if you are have shown your commitment with them, they will share the notes with you. Okay, and when you get the notes, read these things from the chapter number 10 as well. Okay. So that was the provision. IAS 37 is not complete. It is not completed. We have just discussed the provision now. Okay. Now we have two more things in IAS 37, and that those are number one, contingent liabilities and contingent assets. Now, the contingent liabilities and contingent assets are only disclosed. We only disclose the contingent liability and contingent assets. Okay. If they are material, okay, we are not going to recognize the contingent liability and contingent asset. We are only going to disclose the contingent liability and contingent assets. But what is a contingent liability? Let's discuss that thing first of all. Now, to understand the contingent liability, you have to come back to the recognition criteria of the provision. Now, in this criteria, we have three conditions. Now, if any of the condition is not fulfilled, it cannot be a provision. Then what it can be? Maximum it can be a contingent liability. Now, for example, if it is not the present obligation, rather than if it is a possible obligation. For example, it is a possible obligation, obviously due to a past event, then we cannot recognize a provision. Then it will be a contingent liability. Then it will be a contingent liability. Now, what mean by the possible obligation? For example, come back to the catering business. The customer file a case against you. You went to your lawyer and you make a strategy that we will go to the court and we will take a plea that it is not our fault. It is the fault of a customer. They give us a specific time in a summer weather that this food should be delivered at 1 p.m. We have delivered this at 1 p.m. but their function was going on and they give the food at for example at 6 p.m. after the 5 or 6 hours, and due to the summer weather the food was create some bacterial things in that, some bacteria which are not good for the health, and it was totally the fault of the customer. Nothing was wrong on our part. So you take the plea, the court order the investigation. They have appointed an investigator officer. So now that officer is appointed by the law, appointed by the court, is doing investigation. So the result of the investigation can go anyway. Okay, so there is not at the moment, there is not the present obligation, but there is a possibility that the obligation may be converted into present obligation. So that is known as contingent liability. So that contingent liability have to be disclosed in the financial statement. Okay, you clear? You get it? Everyone? Number two, the second scenario of the contingent liability. That might be a possible obligation. That was the present obligation. There is a present obligation due to a past event. But outflow of economic benefit is not probable. Outflow of economic benefit is not probable. Okay. For example, there was a blast in a manufacturing plant due to which 10 workers which were working directly on that plant get injured. They file the case against you, and there is a high chance that you will lose the case. So for that you will make a provision. But there was other 4 employees which are sitting at a far away area and taking their food. Now due to blast, when they come to know, okay, the 10 employees have filed a case and there is a good chance to have some compensation. So therefore decided, okay, we will also go to the court that due to this blast, because we were working in a factory and we were working on that plant, and due to that blast, okay, we are not get injured. We were not on that place on that specific time, but we are very tense. We are feeling very, we are not feeling normal. Okay, and now we need a compensation. We have some unrest. So they also file a case against you. Obviously, there is a blast, there is a past blast, and due to which they have some psychological problems which are they facing because their colleagues have got serious injured. So they file an case against you. So there is a present obligation, there is a past event, but your lawyer advises you, okay, they have a make their point. So, but in such cases, normally they are not compensated. They are not compensated. Okay, so there is no need to pay them some anything. So there is no outflow of economic benefit which is probable. So that will be known as contingent liability. That means at the moment it is not probable, but might be some time when the case go on, some development take place, and it may become probable. But at the moment it is not probable. So we will disclose it as a contingent liability. You get it? That was the second scenario of the contingent liability. First condition is met, second condition is not met. Number 3, there is a present obligation due to a past event. Outflow of economic benefit is also probable, but the reliable estimate cannot be made. In that case also, we will not recognize a provision. We will give only a disclosure of a contingent liability. So if any of the criteria is not met, is not fulfilled, or the provision recognition, we will only disclose the contingent liability. We are not going to recognize any provision. So this is the definition in a book. That might be a contingent liability is a possible obligation arising from the past event, or a contingent liability is a present obligation arising from the past event, but not recognized as a provision because outflow of economic benefit is not probable, or the reliable estimate cannot be made. So in that case, it will be a contingent liability only, and it will be disclosed. Only. That would not be recognized. You get it? And contingent asset is a possible asset, might be due to a past event, but it may become your as proper asset or not. For example, you have filed a case against your supplier, and your lawyer told you that there is a 50% chance that you will win the case and 50% chance that you will get nothing. So in an asset, we will follow the prudence concept. So in recognize an asset, we will be prudent. Okay. So if there is any possible asset for us, it will only disclose as a contingent asset in a financial statement. We will not recognize it. Okay. So a contingent asset will also only disclose in the financial statements. We are not going to recognize it as a liability. Contingent liability is not going to be recognized as a liability, and contingent asset is not going to be recognized as an asset. But on annual basis, we will make a review. If circumstances are changed, the things can be moved any other direction. A contingent liability may become a provision may become a contingent liability. A contingent asset may become an asset, or an asset may become a contingent asset, but it will be reviewed on annual basis. Okay, you get it? Okay, so that was IAS 37, and it was our introductory class. As you know that in our geographical area we have Eid event here, so we will restrict this class till only 2 hours for today. So we will continue this class in the next week with the remaining topics and the practice questions as well on the topics which we have covered today, and we will cover in the next class. Okay. If you have any question, especially if you have any feedback about the class, the speed of the lecture is okay. Okay. Any feedback? Okay, students. Thank you very much. As I told you that these are we have Eid holidays and we are some fun. So we will conduct the class in the next week. Okay, sir, I have a request. Will it possible to start the class bit after? Okay, for that, dear, you have to contact with the management. you convey your problem with them. If they have a plan, they will adjust you. Okay, but if even if you get any the problem is not solved, you will get the recordings. Okay, you will get the recording of the relevant class, so you can fill the gap after watching the recording lecture as well. But for this issue, you should contact with the admin staff. If they have any space in a time, they may adjust you. Okay. Okay, students. See you next week. Goodbye and take care.